37% of Americans can't cover a $400 emergency right now. And there's something happening in the global economy that's about to quietly drain money from every single one of them. But here's what's insane. While you're watching gas prices climb and your grocery bill get heavier, a very specific group of people is doing something with their money that most Americans would never even consider. And by the end of this video, you're going to understand exactly what that is. But first, I need to show you 3 things that changed everything for me. Number 1, there's a pattern that's happened during every single major global crisis in modern history. And once you see it, you will never look at the news the same way again. Number 2, there's a specific dollar amount that separates the people who come out of chaos richer from the people who come out poorer, and it's way lower than you think. Number 3, the single biggest financial mistake you can make right now has nothing to do with the stock market. It has nothing to do with gold. It has nothing to do with crypto. It's something way simpler than that, and almost nobody is warning you about it. Let's start with what's actually happening to your money right now, because most people think that global tensions have nothing to do with their bank account. That's wrong. Here's how it works. When tensions rise overseas, oil prices spike. When oil prices spike, it costs more to ship everything. Food, clothes, electronics, everything you buy at Walmart was on a truck. That truck runs on diesel. Diesel just got more expensive. So now your groceries cost more, your gas costs more, your electricity costs more, and your paycheck? Same as last month. During a recent geopolitical escalation, oil prices jumped over 10% in just a few days. That doesn't sound like a lot until you realize that every $10 increase in oil prices raises global transportation costs by about 1.5%. That cost gets passed directly to you, not to the oil company, not to the shipping company, to you at the register. And if major oil shipping routes ever get disrupted, some analysts project oil could spike to $130 a barrel. For context, the last time oil was near that level, gas hit over $6 a gallon adjusted for inflation. And groceries? Don't even get me started. Okay, so your bills are going up. That part makes sense. But here's where it gets weird. Because while your daily expenses go up during global instability, something else happens that completely defies logic. The stock market goes up too. I'm not making this up. During the biggest global crisis of the 1940s, the stock market gained over 50%. During the Korean conflict in the early 50s, it went up 19%. In the 90s, stocks rose more than 10% in the 3 months after a major geopolitical event started. During a more recent global crisis in 2022, the market dipped 7% and then recovered within a month. Since the 1920s, large-cap stocks have returned about 11.5% annually during periods of major global tension. That's actually higher than the overall average of 10%. Let me say that again. Stocks historically perform better during periods of global instability than during calm periods. And small cap stocks? Even better, almost 14% annually. Why does nobody talk about this? Because it doesn't make for scary headlines, and scary headlines get clicks. But here's the part that actually matters to you. Because those returns I just mentioned, those numbers, they only apply to people who stayed in the market. Here's what actually happens during a crisis. Research shows that stocks typically drop about 10% in the days right after a major event starts. That's the panic phase. People see the news. They see scary headlines everywhere. They log into their brokerage account or their 401k app and they see red, a lot of red. And what do most people do? They sell. A massive study from MIT found that almost 31% of people who panic sell during a market drop never come back. They're gone. They sell at the bottom. They sit in cash. They watch the market recover without them. And then they're too ashamed or too scared to get back in. These aren't dumb people. These are regular people who had a biological response to fear. Your brain literally cannot tell the difference between your portfolio is down 10% and a tiger is chasing you. Same stress hormones, same cortisol dump, same adrenaline. Your body screams sell in the exact same way it screams run. And that's exactly what the wealthy are counting on. If nobody's ever shown you this before, hit subscribe, because what I'm about to show you next is even more insane. Every single crisis, every single downturn, every single moment of global uncertainty, there is a massive transfer of wealth happening. And it's not from one country to another. It's from regular people to wealthy people. Here's how it works. When the average American panics and sells their investments during a crisis, they're selling at a discount. They're taking a loss. Who's buying? Wealthy investors, institutional money, Hedge funds, people who have studied this exact pattern and have been waiting for this moment. Warren Buffett wrote a famous piece in the New York Times during the 2008 financial crisis. His message was simple. He was moving his personal money out of government bonds and into American stocks. While everyone else was running for the exits, he was loading up. His exact philosophy? Be fearful when others are greedy, and be greedy when others are fearful. He invested billions in other securities while markets were falling apart. The result? He made a fortune. Not because he's smarter than you, because he understands the pattern that you were never taught. Every time there's a crisis, wealth doesn't disappear. It transfers. From the people who panic to the people who stay. From the impatient to the patient. And right now, you get to decide which side of that transfer you're on. Let's make this personal. The median emergency savings for Americans right now is $600. $600. That's according to a 2025 survey. 21% of Americans have no emergency savings at all, and 37% can't even cover a $400 emergency. Now connect the dots. Oil prices spike. Your gas bill goes up $40 a month. Your grocery bill goes up $60. Your electricity goes up $20. That's $120 a month you weren't planning for. In 5 months, that $600 emergency fund is gone. And that's the baseline scenario. That's without things getting worse. Meanwhile, the person who had a real emergency fund and kept their investments alone, their 401k recovers. Their portfolio grows. They come out the other side ahead. You come out the other side further behind. Same crisis, completely different outcomes. The only difference is what you know. Now here's where I need to flip everything I just told you on its head. Because your instinct right now might be to think, okay, cool, I should buy a bunch of stocks when the market dips. That's not what I'm saying. That would be market timing. And market timing is a trap. Here's the counterintuitive truth. The smartest move during global chaos is not some clever strategy. It's not picking the right stock. It's not buying gold. It's not moving everything to crypto. The smartest move is the most boring move imaginable. Do nothing with your investments. That's it. That's the whole secret. The wealthy don't have some magic formula. They don't have access to information you don't have. They just don't press the sell button. That's the entire edge. They understand that the dip is temporary. They understand that markets recover. They understand that the 10% drop is the price of admission for the bigger gains that come after. A Morgan Stanley study of nearly 120,000 investors found that 93% of people with a financial plan were on track for their goals before the 2020 market crash. The market dropped 34% in 33 days. And the people who didn't sell, they recovered everything. The people who panicked and sold, they missed the recovery. A hypothetical investor who sold and stayed in cash for 1 year missed roughly 17% in portfolio gains. That's potentially tens of thousands of dollars gone. Not because of the crisis, because of their response to the crisis. So if the answer is do nothing with your investments, then what do smart people actually do during uncertain times? Because they're not just sitting on the couch. They're doing 3 very specific things. First, they make sure their financial foundation is solid before things get worse. That means their emergency fund is stacked. Not $600, not $1,000. 3 to 6 months of living expenses. For the average American household spending about $6,000 a month, that's $18,000 to $36,000. Now I know that number sounds impossible if you're living paycheck to paycheck, but here's the thing. You don't need to get there overnight. You need to start. Second, they stop consuming financial news like it's entertainment. Every major study on panic selling shows the same thing. The more financial news you consume during a downturn, the more likely you are to make an emotional decision. There's actual data showing a direct correlation between how much people search for financial news during market drops and how much panic selling occurs. The news is designed to make you feel urgency. Urgency makes you sell. Selling makes you lose money. Turn off the news. Third, if they have money to invest, they keep investing on the same schedule they always have. They don't try to time the bottom. They don't try to pick the perfect day. They just keep their automatic contributions going. Dollar cost averaging. Every paycheck. Good times or bad. This is the most underrated wealth building habit in existence, and it's free. Now I need to address the elephant in the room, because some of you watching this don't have investments. You don't have a 401k. You don't have a brokerage account. You're watching this thinking, cool, Max, but I'm trying to pay rent. I hear you. And honestly, this next part is more important for you than anyone else. The real financial risk during global instability isn't about your portfolio. It's about inflation eating your purchasing power alive. When oil spikes, inflation follows. When inflation rises, your dollar buys less. Every single day. This is not theoretical. During past periods of global tension, Oil prices surged over 30% in the first year alone, and inflation rose right with it. So what does that mean for someone living paycheck to paycheck? It means the cash sitting in your checking account is losing value every day that inflation stays elevated. $1,000 today might have the buying power of $950 in 6 months if inflation picks up. The simplest protection against this? Move your savings, whatever you have, into a high-yield savings account. Right now, the national average savings account pays 0.4%. That's basically nothing, but high-yield savings accounts? Some are paying over 4%. On $10,000, that's the difference between $4 a year and $400 a year, for doing literally nothing except moving your money from one account to another. This is not investing. This is not risky. This is just putting your money in a better parking spot. All right, let's get into the exact steps. No fluff, no vague advice. Specific actions you can take today. Step 1. Open a high-yield savings account this week. Not next month, this week. Look for one paying at least 4% APY. Most of them have no minimum balance, no fees. It takes 10 minutes online. Transfer whatever you have, even if it's $50. The habit matters more than the amount. Step 2. Set up an automatic transfer. Pick a number you can handle. $20 a paycheck, $50, whatever won't make you miss a meal. Set it to automatically move from your checking to your high-yield savings every time you get paid. This is your emergency fund. Don't touch it unless something actually goes wrong. Not shoes are on sale wrong, car broke down wrong. Step 3. Build to $1,000 as fast as possible. This is your first milestone. $1,000 covers most single emergencies: a flat tire, an ER copay, a broken phone. Once you hit 1,000, you've joined a group that most Americans aren't in. 53% of Americans withdrew from savings last year. The average withdrawal was $2,900. You need to be the person who doesn't withdraw. Step 4. If you have a 401k at work, do not log in during a downturn. Seriously. Delete the app from your phone if you have to. The less you look at it, the better your returns will be. This sounds insane, but the data is clear. The investors who check their portfolios the least frequently earn the most over time. Every time you look at a red number, your brain releases cortisol. Cortisol makes you want to sell. Selling makes you lose money. Don't look. Step 5. If your employer offers a 401k match, contribute at least enough to get the full match. This is literally free money. If your employer matches 3% and you put in 3%, that's a 100% return on day one. There is no investment on earth that gives you a guaranteed 100% return. For someone making $50,000 a year, that's $1,500 of free money annually. Over 20 years with compound growth, that turns into something life-changing. Step 6. Create a crisis budget now. Not when gas hits $5. Now. Go through your subscriptions. How many streaming services do you actually use? How many app subscriptions charge you monthly? The average American has $432 in recurring subscriptions per month. Most of them don't even know it. Cancel the ones you haven't used in 30 days. That money goes straight to your emergency fund. If this changed how you see money, subscribe. Because next video, I'm going to show you the exact income number where everything changes in America. And it's not what you think. Let me close the loops. Remember the pattern I promised you at the beginning? Here it is. Every major global crisis in modern history has followed the same cycle. Markets dip, people panic. Wealth transfers from panickers to holders. Markets recover. Markets surpass their previous highs. Every single time. The dollar amount that separates winners from losers? It's $1,000. That's it. $1,000 in a high-yield emergency fund is the difference between riding out a crisis and being crushed by one. And the single biggest financial mistake you can make right now, it's not about which stock to buy. It's not about gold or crypto. It's panic selling. It's letting your fear make financial decisions. It's watching the news, feeling scared, and pressing sell. That one emotional decision costs the average investor more money over their lifetime than any crisis ever could. The money stuff nobody teaches you isn't complicated. It just takes knowing the pattern before the pattern happens to you. I'm Max. This is the money stuff they never taught you.